Hello and welcome to another update video on ADA. So here I'm looking here at the daily time frame for ADA, and the ADA chart is still showing some bullish strength. Yeah, the key levels are all still holding, which is good. So the 51-cent level, as you know, as per previous updates, it's on the chart. I mean, it's the key level here on this chart, right? We've been talking about that extensively. And it's been tested, that level, recently, or it was tested recently on the 22nd of June, and this level is holding. And that is the level that helps us distinguish between bullish and bearish momentum. Now, we have a good reaction to that level, but don't think we are out of the woods yet. That's definitely not the case, because we can get easily still a break below that level. The rally from that low is in 3 waves so far, and the yellow scenario is plausible. But I still don't want to give up on the white scenario, even though I know a lot of you have sent me messages and are assuming that ADA is going to break down. I mean, it can happen, but honestly, as long as the 51-cent level is holding, this could be a triangle that breaks out to the upside. Yeah, so that's why I highlighted this level here so clearly with the yellow and red support lines at 51 cents. So any break below would, I mean, it's possible, right? Would likely send us down into the November, October, September low area, so around 29 to maybe 35 cents. That can happen, for example, in the yellow scenario, in which I'm tracking here an ABC structure, A wave down, B wave even as a triangle, and a C wave down. And that B wave as triangle can be labeled A, B, C, D, E before we go down lower, yeah? But for now, we're holding that 51-cent level, and that keeps at the moment both scenarios alive, because the yellow scenario will stay alive as long as we stay below the green line. Here at 86, yeah, let's say 87 cents, okay? That's a critical level, because as long as we stay below that level, the yellow triangle forming lower highs, higher lows is valid. And the B wave could be the triangle, but the E wave of that B wave must not break above the previous swing high. That would invalidate the triangle, because a triangle basically consists of higher lows and lower highs, and that will be broken with a break above that level. Now, the fact that we've now broken above this descending trend line, it indicates some temporary bullish strength, but really only short term, because we're still moving in a range, right? So yeah, it's short term a positive signal, but honestly, the market has not broken above any critical levels yet. So that would be the 87-cent level. And then obviously we have here another trend line, which is currently coming in at around 96, 97 cents. So that also means, in other words, that a break above 87 cents would be further confirmation for the white scenario, for that scenario in which the wave 4 here, this triangle might have bottomed. Again, quick reminder, we've been tracking this triangle, I think, since February. And I can track it as an A wave down, a B wave up, a C wave down, and a D wave up, an E wave down. Even though it looks more like a descending triangle, that is still a valid, potentially valid wave 4. With a wave 5 to the upside, it can take us to $1.70 plus. So I gave you all the levels. For now, we are simply moving in a range, as you can see. And that can all, it can just be an E wave. It could be an E wave. There's no way of telling the difference. Now, if we see a 5-wave move up, which we haven't seen yet, then it is more likely the white scenario, because an E wave must not be a 5-wave move. But this is so far only a 3-wave pattern. I keep you updated about that. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.